Now for our next session, I'm excited to introduce Yaguara. They're a Hawke Media partner and official eCommerce Week LA sponsor, and actually our first portfolio company out of our fund. So very on target. Yaguara is a platform designed to aggregate and simply present data for all levels across your e-commerce organization. Get the insights you need to work better together. Tune in as Yaguara discusses scaling an e-commerce brand. Existing between two conflicting ideologies, it's simultaneously becoming more viable and more challenging than ever before to scale an e-commerce brand. While brands have big ideas for their businesses, scaling, growing, accelerating, they often lack a clear view into its health and ultimately lose sight of what matters most to their organization. Brian Mahoney of Arfa Inc., Jeremy Kai from Italic, Sybil Wilmot-Smith of Pop Shop Live, and Jonathan Smalley of Yaguara will discuss how to focus on what matters most. Jonathan, thanks for joining and take it away.
Hey, Eric, thanks so much. Really appreciate it. Great to be here. And thank you to the awesome panelists that are going to be here today speaking. So I guess, as Eric said, I'm Jonathan. I'm the founder and CEO here at Yaguara. But more importantly, we have three really amazing panelists on today that I think are going to have some really brilliant insights into thinking about how to scale an e-commerce company, and also I think touch on quite a bit of like what we think the future of e-commerce is going to look like. So would love just to start things off. Sybil, why don't we start with you? Would love to just introduce yourself, give us a bit of a background on who you are, where you are now, and what you're doing.
Hi everyone, I am Sybil. So I'm head of commerce at Pop Shop Live. We are a live streaming shopping platform that allows sellers to create immersive, engaging, sustainable live show format, heavily focused on conversion, retention, and organic growth. My role in particular is sourcing, onboarding, managing sellers and partnerships to ensure that they find success as quickly as possible on the platform. Most recently, prior to Pop Shop, I headed up new ventures and trends at notonthehighstreet.com back home in the UK, which is an online marketplace with a network of around 5,000 individual makers and sellers. Before that, I spent the best part of 10 years at net-a-porter.com. So I joined as one of the first 100 employees there, worked my way around most of the departments, but spent the bulk of my time there, so just over 6 years, as a buyer. So running multi-million-dollar departments across women's wear, and honestly, sort of the best introduction retail education I could get. And then, started at Pop Shop Live springtime of this year.
It's amazing. Such a really amazing background, I think, on obviously like some more traditional retail and now in like really something that's pushing the boundaries in terms of commerce. So thank you so much for joining. Jeremy, why don't you take it away next and tell everyone a bit more about yourself?
Sure. First of all, thanks so much for inviting me and excited to be a part of this this panel today. So I'm Jeremy. I'm the founder and CEO of a company called Italic. What we have is a membership that costs $100 a year, and in return, all of our members get to shop 1,000+ products that we design and develop ourselves at prices where we don't make money. So as a result of that, our prices tend to be pretty competitive, typically 60 to 80% lower than our direct-to-consumer competitors, as well as traditional incumbent brands. And prior to that, I started and ran an enterprise SaaS company, so very different than what I do today. Excited to be here.
Yeah, thanks, Jeremy. I'm currently wearing a pair of your cashmere joggers, actually.
Oh, great!
So I can vouch for their quality and for the price to value. Brian, to finish us off with the intros, why don't you take it away?
Yeah, thanks a lot. I love the pandemic uniform, by the way. Like, I'm going to wear something presentable up top, but then comfortable, hopefully cashmere jogging pants down below. That's great. I'm also happy that all the panelists got the memo about wearing black with our respective backgrounds. That looks pretty sharp. So thanks for having me. It's lovely to be here, although I'm sort of sad that we can't all be together in Los Angeles. I bet you that would be an awful lot of fun soon, hopefully. My name is Brian Mahoney. I am the co-founder and chief technology officer at a company called Arfa. Arfa is a platform for the creation of multiple direct-to-consumer brands that we say we co-pilot. So what that means is we create them with the very same people that they seek to serve. We got started a little over 2 years ago. We've launched our first 2 brands this year with more in the works. Before starting ARFA and working on direct-to-consumer technology there, I was the chief technology officer at a company called Glossier for the better part of 4.5 years. And then the 15 years before that, again, working in e-commerce, I can't seem to shake it. I ran a digital design and development agency in Montreal, Canada called Dynamo, whose niche was really working with early stage venture-backed startups in, you guessed it, the direct-to-consumer e-commerce space. So that's me.
Awesome. Well, super, I think really exciting to have all 3 of you on here. I want to start kind of before we talk about scaling, I want to take a step back. Obviously, I think this year has been hectic to say the least for everyone. But in some ways has been quite a tailwind for e-commerce and you know, pushing forward not only probably each of your individual brands and companies, but also commerce as a whole. And I think one of the reasons I was so excited about this panel is each of you and your companies are approaching, I think, commerce in such a really unique and interesting way. You know, and so I'm curious to hear from each of you, and Brian, maybe we'll start with you and then work our way backwards. When you think about the future of commerce and how COVID might have impacted consumer behaviors, you know, why do you think like the way ARFA is approaching commerce is so uniquely positioned, and why is it a strategy that you all have taken on?
Yeah, it's a great question. So I said we're the platform for the creation of multiple brands. And like, so I guess that is indicative of where we see the future. So the future is perhaps, we're not long, enormous monolithic brands that go from, you know, 0 to $1 billion of revenue really quickly. I think when you do that, you increasingly create a brand and a series of products that are targeting the median customer, and the median customer is sort of no one. So for us, consumers are demanding more. They want to be part of not just the product creation, but the sort of like the genesis of the brands as well. And it's a little bit easier, and I would argue more authentic to do that on a smaller scale. And I think for years, especially for venture-backed companies, niche was kind of a term we wanted to stay away from. It was growth before everything else, growth before profitability. And in service of growth, sometimes you lose that connection with customers. So it's a long-winded, somewhat meandering answer. For me, I see the future as being more brands that are more resonant, where the people that you're selling them to are involved in every single part of it. You know, like we tend to shop for brands that we identify with. So like brands are increasingly becoming a part of our identity. So why not give consumers an opportunity to sort of like co-create those brands and co-create those products? So while it's more difficult than ever to stand out when you do launch something that is new, and like while you know the pandemic has accelerated e-commerce, but it's also made it more difficult to sort of like to find that resonance. I really see the future as being more of these smaller brands that have involved their consumer from day one.
Yeah, great answer. I almost on the other side of things, Jeremy, you all have taken this like unbranded approach. Yeah, I think people would love to hear you speak about how Italic has approached things not only from a totally different business model, but also from kind of this like unbranded brand approach.
Yeah, you know, it's there's a lot to go over here, and I'm sure we'll dive in a little bit further. But I feel like you know, at a high level, the way we view the future of e-commerce, if you will, and also just omnichannel in general is, you know, we see a bifurcation, and people have been talking about this for a long time. But I think a bifurcation not just towards high-income spenders and low-income spenders, but also on the brand side, where you have pretty large, like you know, Brian mentioned, monolithic brands that have either attracted enough capital to scale or have been around for decades, so that they've reached sufficient scale to be present in many people's minds. And also on the smaller side, on the niche side, I think there's now thousands and thousands of new brands that come every single week, and everyone has the tools to launch an effective brand nowadays. So I think when we think about it that way, I think the way we really approach merchandising and product development really is in the lens of, is this like an emotional purchase, or is this a rational purchase? And, and for a lot of those customers who will really need to, for example, have a logo on their handbag, there's many thousands of brands that can serve that purpose. But for those who don't necessarily care about that, that emotional attachment to a logo on a product, but instead seek value and seek quality at a price point that they perceive to be fair, I think that's where Italic does really well, which is, we know we're not anyone's emotional purchase, but I think in cases where, let's say you want really nice bedding and you don't necessarily want like a flashy, logo on it, or you want a good deal on it, then Italic does really well in those cases. And I think to the case of to the customer, it's really serving the middle market, in which we have a lot of high income spenders, a lot of low income spenders, but the majority of us, the majority of our members are, middle market Americans and big cities as well as small. So yeah.
That's awesome. Kind of going off of talking to a different type of customer base and how that's changed pretty dramatically. Sybil, obviously you've worked at some of like the probably most well-known brands in the world with Net-a-Porter, and now you're working, at a company who's helping these brands have like a totally unique type of distribution. Super curious to hear from you. Why was kind of Pop Shop such a specifically interesting thing to you, going from kind of like working directly inside of a brand to now more on like the technology partnership marketplace side of things?
Yeah, sure. I think for me, I was kind of spoilt having started my career at Net-a-Porter.com. It's a difficult, it's an amazing place to start, but it sets the tone pretty high to then match anything. So I'd been looking for a while. I really hadn't seen much innovation in retail. I'm super proud of what Nap created, and that sort of, clean, monogrammed aesthetic, the white grid, the way we all kind of shop today in a lot of brands. And I'm very proud to have been part of that. But personally, it wasn't inspiring me anymore. I was bored of shopping that way. The excitement had been lost. It had become very much just functional, which obviously is a huge part of eCom, but I kind of lost that excitement and that discoverability and that connection, in all honesty, with those brands. And I think what's very different with Pop Shop Live, it's not just eCom with video. That's not how it works. The dynamic that Live brings and that experience is truly unique, and I haven't found anywhere else. So, it's this idea, I think, with Pop Shop, we call it this collision of where social, commerce, and entertainment all meet in one place. And, we can't exist without the other. So all three elements are really important. Our vision is, to empower and to inspire people to expand their identity, experience, and their connection. But within this really self-sufficient ecosystem. So that's something, having worked not on the high street, that I was also really keen about, this idea that we are equipping sellers, our brands, with the tools to find success and to become self-sufficient. And that connection and relationship, I think, between the audience and the host is really special and unique. It's a key factor for us when it comes to our high retention rates. It provides all of the things that good eCom does. It's reach, it's access, it's democratization of products, it's, good organic growth, shared experience, all of those good things. I think particularly pertinent this year at a time when we've lost a lot of connection and we are all remote, especially when you look at physical stores, really missing that engagement and that direct relationship with their customers. I think it's kind of twofold. It helps sellers and brands, they want to safeguard for the future and maybe look to add additional revenue channels to their strategy in case, God forbid this happens again and they have to close all their physical stores. So I think that's something that's amazing that's come out of it. I think as well, looking on the consumer side, there are going to be a lot of, I say kids, but, younger people growing up who have traditionally looked at, mum and dad with traditionally stable jobs, which perhaps have been turned completely on their heads this year. And so I think platforms like Pop Shop also inspire that generation to perhaps think about, additional revenue streams, being self-sufficient and being able to essentially start a store from their bedroom, which is pretty special as well.
That's amazing. I think one of the things that each of you have touched on a bit is kind of this community, this aspect of like being really close to customer and even, leveraging them to have better experiences, building that community, with in between the host and the shopper. One of the things that a friend of Brian and I's, Henry Davis, has said to me about product market fit is, you know, your product market fit when your consumers are behaving irrationally, whether they're referring customers or they're reordering really rapidly. And so each of you approach community and like building that relationship with customers in different ways. So I think kind of we'll just bounce this right back to you, since you were already talking about it a bit. But with PopShop, how you are approaching, you know, the host versus consumer experience, building that relationship. Why do you think that's so important? Especially, you talked a bit about kind of the future consumer who's coming up and is going to be like a large buyer. How does PopShop think about approaching building that relationship?
Yeah, so I think all of us hopefully understand that, you know, a customer's experience goes beyond just buying a product. And the social and entertainment sides and angles to PopShop are at times even more perhaps relevant than the commercial side. So, you know, we have people that tune in for dance routines in some shows. We have, you know, really special moments where our audience shares stories with one another and with the host, and it's almost like this kind of agony aunt moment where the host pauses from selling and actually just engages with the community. So we see huge value in shared experience and co-creation, and that's what community really brings. Like I said, very much like physical retail, you know, the importance of great storytelling, authenticity, expert knowledge. You know, those aspects really help with conversion, but also you know, cultivate and nurture this really strong little community that comes back week on week. We want people to keep coming back, tuning into their favorite shows and recommending them. So our audience, although remote, are able to communicate obviously through our chat and two-way video, answer questions in real time. So I think there are lots of benefits from the customer side. From the seller side, I think really unique as well. A huge value add is they're able to get instant insights from their customers. You know, they can literally say, do you prefer this color or that one? Does this price point work for you? What do you want to see more of next week? Our viewers don't hold back. So, you know, they really share their insights, which I think is really invaluable to the sellers. And we also, you know, celebrate each other's wins. So we have animations that pop up when someone makes a purchase or receive a gift or, you know, wins a competition. The whole room kind of, you know, joins in and celebrates. So it's, yeah, it's a really, really important part of the PopShop experience for sure.
That's great. Jeremy, I know from a brand perspective, I'm actually part of your Facebook community, and I know that's something that you all leverage quite a bit for both feedback and a little bit of like R&D. Talk to us about how Italic has approached building a community.
Yeah, you know, this is like always like a fun topic because I feel like community has always been this nebulous kind of fuzzy term that a lot of ecom brands use, and sometimes it's like, yeah, we have an Instagram community. Sometimes it's like, you know, for us, like it really we productize community as two things. One is from a very data-driven merchandising lens of, you know, like how do we mobilize our members to basically give us information to tell us like what should we make next for them in order to better acquire or better retain our existing members. And then the second lens is like on a very specific level, once we actually enter into product development, you know, what are features that matter on a product that would be important to you know, to one of our passionate members who takes the time like you do to join our Facebook community and propose, you know, features on a product. So or feedback on an existing product so we can improve it for the future. So on the first one, really, it's you know, we're serving on all points of the customer journey, from why you don't join, why you join, when you're onboarding. You know, you give us all this data that we actually look at from the lens of, you know, if we introduce this product, does it allow us to convert our existing or convert members at a better rate? Because you know, we've seen it happen a lot of times through people who joined the email list but didn't convert, for example, or on the flip side, you know, people who are existing members who are suggesting new products. You know, what are the trends that we're seeing on a I guess a purely like survey level that we should introduce so that we believe it'll better serve the members and they'll better, you know, retain over the long haul. And then once we actually get into the product development, that's when we actually take, you know, physical samples and, you know, post photos, request features, for example, we're developing luggage right now, and we've been doing so for years. And through the many samples that we've gone through, we've always been able to ask, like, do you prefer YKK, zippers? Do you actually want a battery in it, or you don't? Is it like even useful? Do you want inner compartments, like things like that? Same with candles, same with our cashmere, like so on and so forth. So I think as it scales, one thing that has been, I think, shown to be valuable is like it's actually become a benefit of becoming a member. Typically, it's just like purely savings driven. It's like, okay, if I become a member, I'm gonna save like X amount by purchasing 5 times a year, and we have a money back guarantee, and we have like all these other things. But one intangible aspect that isn't quantified is like, hey, it does actually feel good to participate in product development, and you feel like you have an ownership in the products that you ultimately would be purchasing, which I know is something that Brian, I'm sure, will get into much more than we do. But yeah, so it's been a really big part of our company, and it's almost been like organic, in which we didn't intend to kind of build the company this way, but it's turned out in a positive light.
Yeah, I love it. I mean, Brian, going to that, being at Glossier when you were at Glossier is maybe one of the more famous companies in the space in terms of like leveraging community to build new products and just to scale customer base. I mean, talk to us a bit about your time there, as well as how that's informed kind of the entire approach at ARPA.
Yeah, my dog is barking. This never happens. He literally never barks. I have no idea what is happening. So I'm sorry about all of the background noise. I can't seem to, not that I tried, to distance myself from the Glossier community story, whether it's like Glossier community or content in commerce. I mean, man, I've talked about this forever and ever and ever. But the community aspect of Glossier, especially early on, like 2014 to 2016, was really fascinating. I mean, that brand had an ability to recruit people and built an amazing platform that made everyone feel like they were a part of it. And not every single product at Glossier was developed along those community lines, but some of the most successful ones were. And like I continue to point to those as success stories. So there's this fine line between crowdsourcing and co-creation or co-piloting. And you said sort of like during the intro, the Italic approach is interesting because it's sort of unbranded, but it isn't. Like Italic asking people for their input on like features that they want on the product. Like we're the product experts. We are going to guarantee you, because you have this relationship with our brand, that we're going to ship you something that is of high quality. But if there's like some tweaks that we can bring to it that are going to make it better for you, we want to do that. And in so doing, you're creating a product that they feel like they were stakeholders in. So not only are your customers going to enjoy it, they're going to be around for the long haul, but they're going to be really excited to tell their friends and family about it. And that organic growth, like you just can't put a price tag on that. That is absolutely everything. And Glossier had a media component to what they were doing as well, which was the perfect platform to be able to do that storytelling. So it's that co-creation completely out in the open. Who do you want to play your dream cleanser in a movie? I think that was the post that Emily had written on Into the Gloss when we were thinking about making what today is called the Milky Jelly cleanser, a cleanser that you're supposed to use on a daily basis. And boy, oh boy, like the comments on that post were just unbelievable. Like the level of engagement was fantastic. And those commenters that were the most active were the ones that we seeded the product to, the ones that we asked questions about, like, should we change this ingredient? Or like, what do you ultimately want this to smell like? And that product continues to be a runaway success. Like we knew what we wanted to build as a product, but we allowed the community to come in and see a little bit behind the scenes. At ARPA, we've taken that approach to the whole next level. It's not what product do you want us to see us build? It's like what brand needs to exist? And we're not constrained by aisles in a drugstore. We have the opportunity to go out and create entire categories. And what we're trying to unlock in terms of this organic growth is the storytelling component to brand creation and product development, using that as like super authentic marketing materials I haven't seen done too often before. So not only are we trying to find these brand co-creators, we're ultimately trying to find the faces of our campaign, the faces of these companies. And I think that's really a way to retain that authenticity and create these stakeholder customers that, for me, are really the future of commerce.
Thank you all so much. I think now we're going to move over a little bit into really what this panel was originally supposed to be about, which is like scaling e-commerce. I think kind of three areas that I think are really interesting that would love to hear from each of you on is one, like scaling initial customer acquisition. How do we think about that? Maybe organic versus paid. Then thinking about like, what does it look like to scale kind of like customer retention and scale customer lifetime value? And then like internally, what does it look like to scale a team, to scale your technology? How do you have to think about each of those things? Hopefully we can get a little bit more tactical here and give some of the folks that are listening some like real tangible things to come away with. So I guess starting with acquisition, you know, as you think about kind of starting and then scaling a brand, and I would be remiss here if we didn't talk a little bit about metrics, since that's what Yaguara does. But Brian, maybe we can start with you a little bit. As you think about whether it was the brands that you worked with early on at Dynamo, at Montreal, or with Glossier, and now with Arfa, you know, how do you think about growing initial acquisition? And then, you know, I think like a little bit double clicking into that, like, how do you think about, you know, this balance in between like organic and paid really early on as you're building that initial customer base?
Yeah, I mean, I think it should start, we should anchor this conversation around profitability. And I lived through the sort of like the heydays of where profitability didn't matter, and you could just continue to spend to acquire customers to satisfy top line growth. And that works to some extent if you have product market fit, if you have customers come back, and if you have the sort of the organic complement to that paid channel solved. So if you can somewhat efficiently go out and acquire a customer, and that customer can go and acquire you a few more, then, you know, I think you've earned the right to spend and go and acquire that customer. But if you don't have that side of things figured out, and that can be the social commerce aspect of things, that can be conversational commerce, that can be whatever you end up wanting it to be, that is super critical. You know, we talk about the sort of like the first wave of direct to consumer that came about to sort of cut the middle person out. You know, like, I'm going to go direct to customer so I can get you this kind of the same product, but I'm going to get it to you faster and cheaper. And now in like the sort of like the new wave of direct to consumer commerce, like, I really think the middle person that we're trying to cut out today is Facebook and Google. So like that, they're basically hoovering up all of the margin that we have. And if we continue to sort of like dump millions and millions and millions of dollars there to acquire customers, it doesn't matter how much product market fit we have, the brands just won't survive. So what I've seen, both in launching new brands and obviously like the massive amount of scale that we achieved at Glossier, and now launching new brands at Arfa, is striking that balance between how you use paid as an accelerant and as a lever to complement your multi-channel and organic efforts. Like, that's the key to success. But if you don't have, and I'll use this as a segue into metrics, but if you don't have really good visibility into what channels are performing and how that investment that you're making is paying off, then you're flying blind, and you're probably using someone else's money in a reasonably irresponsible way, and like lighting it on fire.
Well, so that leads me to ask Jeremy, as a brand that's selling, you know, goods at cost, with a subscription, how do you all think about organic versus paid, and think about, you know, what you can spend on a, you know, cost to acquire a customer and those sorts of things as a business with a bit of a different model?
Yeah, you know, I think that's actually the single hardest question you can ask anyone in the industry right now. It's like, you can talk about product forever, you can talk about like how we have a unique founding team and whatever, but like at the end of the day, the hardest part, I think, in commerce nowadays is to stand out and like to acquire a customer profitably, or to retain them profitably over the long run. And I think, frankly, it's a really hard question. And I guess like when I came into ecom, at least I thought it was like black and white, but the longer I've spent in it, the more I realized like, hey, it's actually like pretty universally case by case. So I think the way we think about it at Italic is like, you know, we're self-aware, like we know we're not a cool New York like brand. And as much as that would help, unfortunately, that's not the reality. So I think, you know, early on, we did want to spend a lot of time on building like earned media and building, you know, a strong like brand approach. But at the end of the day, a lot of how a lot of like how these brands do scale is through paid. And to Brian's point, I totally agree. And I echo that a lot, which is, I think the first wave was all about cutting out the middleman and using that language. But really the middleman at the time was like, I'm not going to distribute through Nordstrom's or Target, but instead I'm going to put it on, these online channels, which at the time were really affordable and cheap and easy to scale top line on. And now the world is obviously a very different place. So I think, for Italic, like we really needed to build a sophisticated like growth model early on, in which, we monitored all of our your standard ecom metrics, such as, AOV, contribution margin, frequencies, LTVs, and so on and so forth on a cohort level. And of course, like I have to give a plug to Yaguara, because that's been fantastic, an awesome product to use for us internally at Italic. So, I think to Brian's point of having visibility, it's basically like you can have the best growth model in the world, but if you're flying blind, like you don't actually, know what you're actually putting money into and getting, what you're getting in return. So, so for Italic, like, we run a little bit of a different model. Because it's a subscription product first. We actually realized over time, like, hey, normally in ecom you make money through margin and markup, and in our case we basically looked at our 12-month and 16-month LTVs, applied our contribution margins at the time, and realized like, hey, we're generally taking around 100 to 120 in basically gross profit at that time, but we would rather take that upfront and basically cap ourselves at that number on a basically 100% gross margin product, but then spread the rest of the value over the course of a year to a member. So hopefully we can deliver, far more than $100 in savings to a customer so that they'll stay for years to come. And I know we're going to go into retention and LTV in a bit, but I think that's really how we structure growth. And that allowed us to build a lot of, I think, I guess like models on how we want to pay for a customer. Paid is ultimately like how we're probably going to scale from, where we are to a much larger company. And of course we want to build in organic components of that, such as like referral and there's a lot of, I think, things that you can productize around that. But at the end of the day, that's how we view it is like paid is, you just have to be good at paid, and you can't like, light money on fire, but you do have to, I think, build an in-house competency or outsourced, but a good partner to do so.
Definitely. Sybil, super interested. Obviously, you have like a ton of experience working at some huge brands with like great brand recognition. So curious, I think, first to hear how you all thought about that when you were in-house, and then kind of leading into our next comment around starting to talk about retention and LTV growth. Really interested to hear how, you all at Pop Shop Live think about like being one of those channels that as people are looking to grow their business, how to be like this new channel and in a new place to engage with customers.
For sure. So, I mean, Net-a-Porter, obviously now and for, the last 15 years has been very well known and, like you say, has great brand recognition. Early on, I mean, it's the same old story I'm sure you've heard, but people thought we were crazy, this idea of, selling designer jeans that no one could feel or touch or try on. And so it took, a while to earn trust, I guess, around that. We had very desirable product, which obviously helps. Visually very appealing, very trend-led, which also helps a huge amount. I think one of the biggest lessons I learned at Net-a-Porter, which there were many, but one of them was that, we could stock 500 brands, but we had to be the biggest brand of all. And I think that was really interesting when you looked at more and more retailers going online and, your hands are somewhat tied when it comes to product assortment in the designer world to RRPs. We might have got Gucci first, but once they saw how well they could do with us, of course they sold to other places. So, even scenarios where as a buyer, I would be in a showroom and someone would come up and just take a photo of my assortment on the table to replicate that to have the Net-a-Porter buy. So, as a consumer, it was interesting because essentially you could buy the same pair of shoes at the same price from someone else. And I think what really came into it was this idea of Net-a-Porter being the biggest brand, of wanting to have that male model deliver, the beautifully, packaged black box, the kudos of saying you got it from Net-a-Porter and not Harrods. People had Net-a-Porter themed birthday parties with like nap cakes, and it was kind of crazy. So that's always stayed with me about, us being the biggest brand of all. I think when we look at Pop Shop, we're fairly young. And most of our growth so far has honestly been organically, and that's not to say that we wouldn't look to paid, and that will definitely become more and more of our strategy, I'm sure. But we've been really fortunate in creating and nurturing this really positive community from day one that demonstrates the best practices for us and the best behaviors to ensure that our pop shop space is really positive for our audience members, but also for our sellers. And this kind of leading by example and setting the tone as our community grows has really helped. So again, we've touched on it, but peer-to-peer recommendations and the importance of that. We want Pop Shop to be a place where anyone can come, find their community, find their tribe. If they can't, create it. We've seen great success early on with really engaged, loyal communities where there are real aficionados in that product category, often centered around these subcultures. Within our sellers, we encourage them to support one another, to watch and learn from each other's shows. But, a huge portion of our organic growth has been on customer and seller recommendations and referrals. So, we know that for sellers to find success pretty efficiently, they need to have converted a portion of their existing community across to Pop Shop. Then we have features such as, sharing shows and things, allowing our customers to share their favorite shows. And again, I think it's tapping into that kudos of being the first person to discover something and being able to share that with your friends and family. And putting the customer at the center. So we empower our customer to choose what they want to watch or what they want to purchase, what they think is best. And enabling them to directly influence the success of a show through how they want to spend their time, their money, their lightning bolts, rather than, I guess, taking a more traditional retailer approach that's more prescriptive. When it comes to like retention and lifetime value and all of those good things, metrics, like I said, we have been pretty selective when it comes to our seller portfolio, starting with a few specific categories and sort of building out really solid case studies. So we have been looking for areas where there are already existing engaged loyal communities, and this idea of this aficionado who is craving expert knowledge, who knows their stuff, who can spend time in a room with other like-minded people, and that's a key determining factor in how we prioritize launching new verticals. Also breadth of product as well, and for retention that's really important because we want customers to come back week on week. We want them to engage in the same shows. We don't want them to just come once and shop once, and no one wants that. So we need engaging content. So you have to have a big enough breadth of product in your assortment to allow for that. And then you need obviously that connection and that content and that entertainment, all of that good stuff. So yeah, I mean, it's crazy. We've seen, in all honesty, that Pop Shop can obviously impact a seller's top line, but also bottom line, less overheads, more flexibility. I know we're talking in like crazy times, but honestly, we've seen sellers within a couple of months shift and make Pop Shop their primary sales channel. So, they're actually reviewing their existing strategy with their physical stores, even with their eCom, and putting everything up on Pop Shop first. This is their primary revenue channel, and changing the way they think about their pre-existing revenue channels, which is pretty special.
It's amazing. I think we've seen from working with data from a lot of different customers that like live and that live engagement is like a huge opportunity for the future of commerce for sure. I think Jeremy, on kind of the other side of things, for you all, obviously LTV and retention is all about like subscribers not churning. Talk a little bit about like how you all have decided to really invest in like building out a really robust product catalog in order to, presumably retain customers for as long as possible by pushing them across to different, not only products, but different product categories.
Yeah, I think on the transactional model, which is, I assume, like what the majority of the audience runs, you either have like, I think really two playbooks. One is like you make a product that is high enough margin to afford acquiring a customer and profit on first order, which is, of course, important. And of course, you'll have like your whale customers who will come back and purchase many more times. But generally, like that's one model of doing things. And then I think the second is like you have a high frequency or subscription model in which, let's say it's beauty or a skincare, in which like if you deliver a value proposition that works and people really love it and build an affinity towards it, and I guess this is CPG as well, people will become loyal, and you don't necessarily have to be profitable on day one, but I think like you can, get payback fairly quickly. So I think, When we built the assortment with Italic, the thought process was really like twofold. One was, I guess when we look at large scale ecom in general, I would say the biggest exits like in venture are not single product, single brand, single category types of companies. They're actually like very unsexy type of companies like a Wish or a Jet or a Chewy. And those are like the ones that people don't really talk about in ecom, but they're actually the biggest, they're not exited all of them, but I think they have the largest transactional volume in general. And a lot of that was through paid as well. So I think for Italic, like the merchandising lens was like, how do we build a product assortment large enough to kind of like what Sybil was saying, like justify a customer coming back many times and delivering enough value over the course of a year to prove to them like, hey, if I stay around for a while, like I'm going to save many thousands of dollars by sticking on Italic just for $100. And I think like the two angles we take is like on a qualitative level, we want the products that we deliver to hopefully deliver for the membership fee to be paid back in one order or two, in which like if you have a cart of 2 to 3 items, let's say it's your t-shirt and your cookware, like it paid itself back immediately. And then I think on a more objective level, it's like, is this category mature online? Are we not, the first in it? Is it one that doesn't require specific logistics complexity, such as like furniture or food or subscription? And finally, like, is this a product that is historically like sold at a 5, 10, 15x multiple on costs, to which Italic can actually be perceived as a very substantial discount. So, and savings for equivalent quality. So I think on the merchandising lens, like that's what we've really taken, and we've worn that like merchant hat for a long time as we built out the assortment. But I think as we went, as we transition into the membership model, now it's all about frequency. So now we're transitioning downstream into things that don't necessarily qualify as like luxury goods or soft goods per se, but more so into things like pets or travel or even fitness and outdoors, which are things that you wouldn't traditionally associate with luxury, just to make sure that like we can both attract new members who wouldn't have previously signed up because of our assortment, or secondly, really the bundle becomes larger so that a member is more incentivized to stay for years to come because they are looking forward to purchasing the new products. So yeah, I know it's kind of like a long kind of answer, but that's how we view it.
No, that's brilliant. Brian, obviously with Glossier and now with ARPA, there's been not only like pretty massive expansion of product catalog, but then also Glossier with branded retail. Just curious from experience with Glossier and now how ARPA, curious to see how you thought and how those companies think about product and obviously like brand catalog expansion. And then on the other side, how do you think about multi-channel? I know obviously as being chief technology officer, you care an awful lot about customer data. One of the obviously best things about the promise of D2C is like we're much closer to customer and understand them better so that we can create better products and better brand experiences. So yeah, just would love for you to talk about how that's been approached in the past and how you're thinking on that may have evolved over time.
Yeah, there's a lot to unpack there. I think maybe I'll start on the metric side of things. And I love the story that Jeremy told. Like, not necessarily, we're so focused normally on like LTV to CAC. And I think that's like maybe like one of the weirdest ratios to look at, because like we can like fall in love with telling the story that eventually this will pay back and we can afford to spend these like ridiculous amounts of money to acquire customers. I don't think that's true. At Glossier, there was a really disciplined approach to contribution margin on that first purchase. And I think that's the right discipline. We've carried that discipline forward at ARPA as well. So, we're very focused on AOV, units per transaction. The margin that we can make on a product that should inform whether or not like we have the right to go and make that product. If we can't make money on it, we shouldn't bring it to market or convince ourselves of like, well, we're just gonna like expand these categories enormously. So eventually these loss leaders will like prove their worth. I think that's sort of like a slippery slope, especially today, because it's just so easy to create products. So at Glossier, because we were really focused on margin and we were operating in an industry where margins are typically quite high, it made sense to expand the categories. And also like our community was leading us there. They wanted more of Glossier's point of view on this particular category and this particular category. And I think they did that exceptionally well. And then also opening up other channels. And then at ARFA, instead of category expansion, going back to this idea that we're afraid of eventually needing to market to the median customer, we think like, well, when like our first brand, for example, is a brand called Hickey. It's a sweat brand. When there's an opportunity for a category expansion that isn't like an obvious fit into the category of sweat, but that we have a community of folks that are leading us in a certain direction, then we'll chat with them about creating a brand. But the same principles will apply. Can we create products and bring them to market in a way that is in fact profitable? So like we're really hyper focused on contribution margin as an example. And I don't want you all to think that like I'm allergic to paid. Paid has a place, but you have to anchor that somewhere. You need to know like what you can afford to spend, and then how you need to sort of like augment that spend with other channels so that you can be around for the long haul. I think that that's ultimately most important. And then there was the second part of your question was like, I guess, related to sort of like customer data and how do we take advantage of these new channels that are opening up every single day. And I think that that's what we're doing really well at ARFA. So we've created our own bespoke technology and data stack, and we deliver that to our brand managers so that they have the best possible experience for creating content that will help to drive sales, but also allows them to create like today, web experiences that stand out from the sort of like sea of more template driven sites that you kind of see everywhere. And in so doing, in creating the technology in the way that we've done, we allow them to take advantages of opportunities that will present themselves. If we need to do a partnership here, it's really easy for us to get them the information. Where the ARFA brain sort of sits at the middle, we're responsible for collecting all of our customers' data. And the way that I look at that is that our customers are kind of lending it to us for some amount of time. It's our responsibility to protect it and to use it to create better site experiences for them, better tools for our teams to be able to interact with them, for us to be able to listen better, respond faster, but then ultimately give it back to them if they ask us for it. And I think like going back to this approach where like you're giving all these decisions away to a platform, you're not really in control of that data. And I think that is something that brands of the future need to get ahead of. Like how do we make sure that we're collecting this and using it in the way that is right? And that starts with you having like super fine-grained control over it. Does that answer everything?
Yeah, that was great. There was a very long question that you answered quite succinctly. I think we want to leave. We're going to kind of skip the last little bit, and I think we're going to leave around 10 minutes for some questions here. But I think like one of the really interesting things that I heard from each of you all that is like there's been a pretty large shift over the last 10 years. Like 2010 to 2020, it was really around like how do we think about top line? Acquiring a customer was really cheap. And now like just the way you approach customer metrics has kind of like totally shifted, and who investors are willing to capitalize has totally shifted. And I think that's like a really interesting theme to hear across. We've got our first question here from Eric. What are your thoughts on attribution? If I'm spending money on Facebook, Google, email marketing, etc., how do I decide where my customers are coming from, and how do I allocate budgets? So Brian, I'm just going to throw that back to you since you're unmuted. Yeah, start there.
All right, that was a good strategy, Jeremy and Sybil. Stay muted on the multi-touch attribution question. So I have a bit of a soapbox here on like multi-touch attribution. I think it's an effort that like getting super specific around where you got your customer from it's a really slippery slope. And there are a lot of like large vendors out there that are going to sell you a multi-touch attribution model that will guarantee they'll tell you very specifically where you acquired that customer from. I'm here to tell you that you can't actually do that in a way that is right for your customer, or that is not creepy. And it's like, I want to build brands and products along with my customers. I don't really want to trick them. So I can't work with a platform that is treating your data or manipulating your data in a way that I wouldn't want my data manipulated. So I do think it's important to monitor those channels and then just decide what is right for your brand. Like it can be a weighted average. You can use something, it sounds super unsophisticated as like last click attribution, but last click kind of works. But here are the different levers. Here's how we've deployed spend. When we deploy it in the following way, we're seeing this return. So this channel mix seems important to us. So I wish there was a one-stop solution or like an easy canned answer. I think the reality is it depends, and it needs to be fluid. So the more visibility you have into like the relative traffic that you're getting for those channels and the handle that you have on, say, like last click attribution, the more you can do some experimentation and you can pull some different levers and you can kind of figure it out for yourself. But you got to be prepared to constantly stay on top of it, and to be okay with it being right for a couple of months and then being completely wrong a few months after that, and having the flexibility to adjust.
So we're going to move on to the next question, and I want to pose this to each of you because I think you'll each have different answers. The next question is, what are 3 important vocab words an outsider needs to learn to feel like in the know with e-commerce? So I think each of you will have very different, there's lots of three-letter acronyms out there. There's lots of very specific words. Sybil, interested to start with you. What are 3 words that you feel like someone needs to understand to really understand the basics of commerce?
So I think this isn't, I think it's not a word per se, but for us, like a new metric we look at, which is really interesting. So we've talked about AOV and all of that good stuff, but is dollars per minute. So that's a new metric. And that's really important as we look at live streaming. You know, we don't own live streaming. It's going to become a commodity in the future. And that's okay. And so I think that's something that more and more brands and businesses will be looking to. So rather than just looking at how much someone is spending or how many units they're purchasing, what is their value over time, especially in a live environment, that becomes really important. So definitely dollars per minute. And then I think looking at like the engagement is really important. So looking at that on the connection side. So not like a terribly retail term, but looking at your customer behaviors, especially in a live environment, like how they're finding that connection and what's resonating with them when it comes to product, to social, to entertainment. And then a third one, I guess, perhaps retention. So we've spoken about it a bit, but it's really important. So what's keeping them coming back? Like, what are you doing well? What are you doing the best to ensure that they're coming back to you, they're shopping more from you, they're engaging more with you, they're telling all their friends and family about you, the kudos and recommendation and all of that. You know, without our communities, we can have the best product, tech or physical product in the world, but we rely on them. So I think, retention is really important as well.
Jeremy, your thoughts?
Yeah, so I'm going to skip past like all this stuff that you probably like AOV, LTV, like all that stuff you can kind of figure out by yourself. I think 3 metrics like that don't get talked a lot about in ecom, but are actually really important are one, cash conversion cycle. So this is like basically, you know, the period by which, like, if you invest in inventory, for example, like when are you going to get that back? And typically the way, you know, when you're starting out, it's like, you know, it might be months, it might be like 6 months, it could be longer. I think great companies, if you can get great payment terms with your vendors, it can basically float you a lot of wiggle room to acquire aggressively into a purchasing, a repurchase very quickly. So I think cash conversion cycle is like one that you know, people like to kind of think about conceptually, but like when you actually start tracking it, it's actually really, I think, a really powerful tool for your balance sheet. Secondly, I would say is, you know, I know we alluded to this, but like getting a really strong understanding of your contribution margins and all the variables that go into contributing to your costs, I think is, you know, critical. You have to get a good understanding of that. You know, we could talk about that like separately, but really I think contribution margin is important. And then finally, payback period. So if you are on a subscription product, or you are on, you know, let's say you are like FabFitFun, or you're like Stitch Fix, or you're like us, you know, are you getting payback month 1? Are you getting payback month 6? are you on a 12 to 24 month period, or even on a transactional level, like if you believe you can, sell a one-time purchase multiple times over the course of a year, then you actually can invest more aggressively into growing with paid ahead of time. So I think those are three that I would recommend you just be aware of as you scale. But of course, like the most immediate would be AOV, LTV, like that type of stuff.
Brian, you want to wrap us up here?
Yeah, those are awesome. I will similarly stay clear of maybe some of the more finance focused ones. I have been increasingly focused the last 18 months on TTFP, which is the acronym for time to first paint. What I've observed over the last couple of years is this progressive slowdown of websites. Servers have never been cheaper, and yet sites are getting slower and slower and slower. And there's a reason for that, but the fact that we're not thinking about performance as a feature as leaders is a real problem. Across the board, I think we should be seeing mobile conversions being 50% at a bare minimum for direct-to-consumer companies, and it would behoove all of us to focus more on performance. So we look at this is super maniacally, and we won't introduce features that slow down the performance. So like time to first paint is one that's super interesting to me. I would be remiss not to say conversion rate. I think conversion rate is something that you need to look at, and don't necessarily give that away to Google and let Google tell you what your conversion rate is. Decide for yourself what is a conversion, and you can have different conversion rates, and you should be looking at your funnel, and you should be deciding like what content is working, what product assortment is working, so on and so forth. And then, I don't know, like those are the two that I'm super focused on these days. I love the contribution margin one. We really like to look at basket size or units per transaction. I think that's like a good indicator of how much someone likes the brand and like how much they trust it, is they're willing to put more than one thing in their cart, especially with free returns these days. Like there's very little risk to like just trying a product, but if you're going to try out a couple of products, it means like you're willing to give a brand a chance. And I think that's a pretty good leading indicator as someone's willingness to come back. So I'd say I'd steer clear of the finance ones. That's a bit financy.
Those are all good answers. And you also happened to answer the other question someone asked about template websites and how you can make those stand out. I think, to be really honest, speed is one of the biggest ways to do that. If you look at like speed layered on top of conversion, those things are indirectly proportionate. So I think we have maybe time for one more, and this one will be maybe a little bit more anecdotal, and we'll try to answer it quickly. But for each of you, someone asked, is there ever a time when any of you felt like giving up, and what kept you going, whether it's in founding a company or in a really hard role? So Brian, why don't you start us out? I'm sure you probably have multiple answers for this.
No, I don't. No, I mean, I'm way too stubborn. And I've had a 20-something plus year career in e-commerce, and I've been so fortunate to work with so many amazing people. I've never wanted to abandon them or let them down, and they've always repaid that favor to me. So yeah, like days are going to be tough for sure, but I can't point to a single instance where I was like, I want to pack it in.
That's great. Jeremy, for yourself, multiple time founder, any times you felt like giving up?
Like every week, probably. No, definitely. I've definitely had plenty of times in my journey where I'm like, oh, this is too hard. Like I should just kick the can and call it a day. But then you kind of realize like, hey, I think if you really love what you're doing and you like believe in the mission enough to kind of grind through, like 99% of the time it's just like not fun stuff, or at least like it's not the sexy stuff. You just grind through it. Like at the end of the day, you're gonna have those couple wins that like kind of push you through those hard times. So I feel like, yeah, I've definitely had a lot of times where it's really tough to kind of like have confidence and motivate the team and rally everyone around a mission. But I think if you do genuinely believe in it, then you're gonna find a way through. So yeah.
Sybil, we'll finish off with you. I know obviously you've moved from quite large companies to smaller companies. I'm sure that has come with intrinsic challenges in itself. Kind of what has kept you motivated across all of those different experiences?
I think for me, the biggest thing was like to keep learning, and that sounds really indulgent. I'm obviously not the business owner, so I'm able to say that, I guess. But that's when I decided to leave Net-a-Porter, when I was like 29 and felt I couldn't learn anymore, which was a massive alarm bell for me. So it wasn't a case of giving up, but it was a case of realizing I'd done all I could there. And then, I live for innovation, that like magic I saw at the beginning of Net-a-Porter and was fortunate to be a part of. And that's what's always propelled me. And that's something that, I really see with PopShop and living for the consumer as well. That's why we're all in it, right? Like you want something you can't find out there. So you go and you join a team that's either doing it or you create it. And but us at PopShop as well, like we really strongly believe that whoever chooses to embrace and master live streaming commerce is going to really define the future of e-com generally in the next decade or so. So yeah, it's exciting.
Those are all really great answers. I think the only thing I can add to that at all is whenever people ask me about starting a company or joining an early stage company, if you're in it for the money, there's much better and easier ways to make money. I think only get into a high growth early stage company if you can't not do it. And if you have the passion for it, then kind of nothing else matters. But thank you guys so much. Really great insights. And hopefully I was able to draw some of the wisdom out of you all for everyone listening.
Yeah, that was a lot of fun. Thanks for hosting.
Thanks so much. Thank you.
For having us, Hawke.
That was awesome. Thank you guys. Really appreciate it. That was really great to listen to. And I do have to say, I think up until about 9-10 this morning, and I was convinced that, no one might show up to eCom week. So you never know as an entrepreneur. I appreciate the question, Jonathan. You're always second guessing, even though if it makes no sense about what's about to happen. So great talk, super important. Hopefully a lot of you are listening there.